Well, my next guest says that the markets are still positive, but starting to look and feel a bit top-heavy. Joining me now, Howard Management CEO and Portfolio Manager Vance Howard. All right, Vance, so how do you quantify top-heavy?
Well, I was looking at that, Charles, and what I was looking at was you're looking at the S&P. We thought we'd hit just a little bit of resistance, and it broke through yesterday. So you can take that off the table now. We've got a clear bull market. I think this market's positive. It's going higher. Our proprietary indicator, the HCM byline's positive, and what that is, it's an intermediate to longer term trend indicator. And as you well know, there's two things you don't want to fight. One, the Fed, but the other thing is the trend. The trend's clearly up. You're in a bull market. Pullbacks are viable. I'm incredibly encouraged, and we're having a lot of fun this year.
Well, we got record bull buybacks right now. The trend is phenomenal, and maybe we'll know more about how friendly the Fed will be, I guess, tomorrow morning, 8:30, when these numbers come out. What about other factors in the market, though? Just, we covered a lot of them in this show. The narrowness. So, listen, you got 10 stocks, over 30% in the market. Those kind of things. Earnings were great, better than expected, I should say. But still, a long way to sort of catch up to the valuation side of this, or the fundamental side of this.
Well, if you take the top 7 out, you drop down on your price to earnings, and it actually becomes reasonable. And we're also starting to see a broadening out of the market. And you and I talked about this earlier, but you did see last night you had a crack in the 10-year Treasury yield, went from 4.6 to 4.3. That's a tell that things are starting to change.
So speaking of tells, I'm going to pick up on that. So we had that move. I think 2 weeks ago, that would have been good for a 2 or 3% move to the upside. The stock market's not reacting to these lower yields the way I thought they would have just a week ago. And that's why I'm wondering if we're back in this bad news is bad news scenario.
I don't think so, because I think what happened yesterday was incredibly telling, and I liked what happened. I think that it was incredibly encouraging. But as you start to see those yields organically come down, which is what they're doing, you're going to see the market broaden out. Maybe small caps will do better. REITs will clearly do better with lower yields. So I think it's a really positive thing. And the 20-year Treasury is now becoming a really fun thing to trade, because it's. Are
you buying the TLT? I know it was on your watch list.
We trade it.
You trade it. I got you. Okay. But you do like biotech and you like some of these biotech names here.
I do, because I'm starting to see the market broaden out. There was 3 that look good. Moderna looks good. Merck looks good. Regeneron's looking good. It's breaking out to 52-week high on that equity. As the market starts to broaden out, some of these names are going to become pretty powerful and pretty strong, and I think you're going to want to start to diversify your portfolio other than just the Magnificent Seven. And you and I were talking earlier about how that's a little bit scary how concentrated it is, and I agree with you. But hopefully as the yields start to come down, as inflation starts to come down, investors are going to come off the sidelines and start to buy some good names like these other companies.
And of course, you still have those $6 trillion of money markets. You've got a lot of folks who bought bonds for the first time. They're probably not going to stay in them. Salesforce. The sell-off overdone, you're saying?
I think it was quantitatively driven. You had one piece of bad news. It drops 20% in one day. That's an amazing drop. But I don't think it was the retail investor. And to be quite honest, I don't think it was money managers either. I think it was all quantitatively driven. But if you look at how strong that is, I love recurring revenue. They have recurring revenue. They don't have to go resell anything. But 2, if you look at Salesforce from an intermediate to longer term basis, what AI can do for that firm, if it can cut 10 to 20% of it overhead off by AI, think of the increase in earnings you're going to have with that little company. It's a great company.
So I can't let you go. I got 30 seconds to go. On a different note, you own the Barcy Ranch. All right. So I guess, as they say in Texas, you're all hat and cattle and wildebeest and zebras.
We got them all.
You got them all. I want to come down there. I want to bring the kids down there.
You come down. It's like a zoo. We do it more like a sanctuary. We do have them all. They're fun to watch. The kangaroo will come up to you. So feed them a carrot and.
Great stuff.
Thank you, Charles.
Great seeing you, Vance.
Yeah.